is not just about drawing lines on your charts, understanding fair value gaps, understanding market movements. So you could be someone who can tell where the market is going to reverse. You can be able to predict the market with precision. But if you cannot keep yourself under control, you're still going to face a lot of problems in trading. So, the self that we bring into trading is our most important asset. The mind that we bring into trading is the most important asset in our trading arsenal. Hello, everyone, and welcome to our weekly sessions on trading psychology, mindset, and all round content on forex trading. So, if you are new to the program, if this is your first time coming across our video, we always do this every weekend, and it is to help us develop our mindset. So if this is your first time coming across our channel, make sure to subscribe to the channel, make sure to hit that notification button, make sure to like and share so that a lot of people can also get access to this information. All right, so without wasting much time, we are going to be looking at impulsive trading today. We are going to be looking at patience and discipline versus impulsive trading, and how we can shift from being an impulsive trader to a disciplined and a patient trader. So, uh, take two traders who have two futures. Every trader will fall into this category. We have the patient trader, right? We have the patient and the disciplined trader who is calm, who has a method and that follows that method, who is strategic in the way they approach trading, who knows what they are doing. They have knowledge about trading, they have knowledge about their own self, most importantly. So this trader waits for confirmation, respects the plan, and understands that the market rewards discipline, not aggression. That is the first category of trader. And the next category of trader, these traders are the impulsive traders, or is the impulsive trader who reacts emotionally to everything in the market. Every swing in the market, they react to emotionally. They are reactive to everything, to every swing, to every market moves in the market. And this trader is inconsistent, meaning that today they follow this strategy, the next day they're jumping from this strategy to the next strategy, maybe because they went online and they had somebody. So consistency in trading does not actually mean the amount of money that you're making. Consistency in trading means your ability to follow your rules, your plan diligently over and over again. So that is where consistency comes in trading. If you're able to set your rules, follow your rules, trade your plan, follow your risk management, it becomes very easy for you. So that is what it's meant by consistency in trading. It's not the amount of money that you're making that makes you a consistently profitable trader. So don't make a mistake on that. Now, this trader jumps into trades without any logic, overtrades, and mixes hope with fear, jump from one strategy to the next. So these two mindsets are going to create two completely different traders. The first one is a trader who is patient and who is disciplined. So they are strategic, they have a method, they are calm under pressure, and this trader waits for confirmations and respects their plans. They understand the market and they trade with the trend. And this is another trader who is emotional, reacts to every swings in the market. So they don't understand them their own selves, and they let their emotions at every time in trading run wild. So these are the types of traders that we have. And unfortunately for us, most of the traders that we have, they fall among the impulsive traders. So most of the traders out there, they fall among this category. They are impulsive, they are not patient, and they are not disciplined. So it is not usually the strategy that has a problem, but the problem is the trader itself. So uh, there is, if you are Catholic, you are going to know this hymn that we usually sing. It says the answer, my friend, is living in all men. All right. And Jesus himself will even say the kingdom of God is within you. So the answer is within you. So if there is a problem in trading, then the biggest problem comes with the trader and not trading itself. So when you understand this and you work on this, you are going to be setting yourself among one of the most, you're going to setting yourself in the top 1% of those who make money consistently. And consistency in trading does not come from results, but it comes from how well you can execute your system, from the process that you bring into trading. So these two mindsets, a discipline and a patient mindset and an impulsive mindset, is going to create two different sets of traders, and definitely one is going to be making money and one is going to be losing consistently as well. So these are the two mindsets that we have in trading, all right? And from this uh you should already know where you should fall if trading is what you want to do, especially if you plan to do this for the rest of your life. You need to fall among the patient and the disciplined trader. All right. And this is how a disciplined and a patient trader thinks. They let the trade come to them. So you are approaching the trade not from a predator's mindset. You are approaching the market not from a predator that chases the market, but from a mindset of a predator that waits for prey to come. So you are an ambush predator. You do your analysis, you let your setup validate, and you let the market come to you. So this is how a disciplined and a patient trader works. Instead of chasing every move impulsively in the market, they do their analysis, have their setup, and they wait for the market, they wait for price to come into their setup. When price gives a confirmation, they trade. When it does not give a confirmation, they invalidate. So if there is no setup, then no trading. They don't force trades in the market. Anytime that you force a trade in the market, you're either going to end up losing money. You pay the price, all right? And you could force a trade and you win, but in the long run, it does not create consistency in your trading. So one good trade is enough. So you get up in the day and your first trade is a winning trade. That is good and fine. And no matter the amount of money that you make on that trade, please, gratitude for what the market offers to you on a daily basis is also what sets the winners from the losers. So gratitude is an important aspect that you need to incorporate into your trading as well. All right. So if you are not grateful, all right, if you are not grateful, then when the market gives you $50 today, you are going to feel as if you should take away $100. And what is going to happen is that you are going to find yourself getting into a trade again when you should have not been in the market. So be grateful for what the market gives you. Be contented with what the market gives you. And this gratitude for the little that the market gives you, or the abundance that the market gives you, is going to open up the doors for you to make even more greater profits in the market. All right. So the market will be there tomorrow, but your capital must be there for you to be able to take the trade opportunities. So we try again the next day always applies, or we try again on the next trade will always apply to those who still have some capital to put into the market. So when you risk everything, you chase trade, you trade impulsively, and you end up losing your capital, blowing your account, what is going to happen is that the setups are always going to show up. Opportunities will keep on showing up, but you are not going to have capital for you to trade. And this creates a very big problem in trading. All right. So this creates a huge mental drain. So knowing that you have that ability to make money, but you cannot make money because you blew your account on the previous trade. And this is a lesson that most of us, most traders get to learn with experience, right? So as a trader, you move from knowledge you go to experience, from experience you develop skill, and from skill you can now start getting profits in trading. So you cannot skip any stage in trading. So that is how the discipline and a patient trader operates. All right, that is how a disciplined and a patient trader operates. They treat the market like a business and not a casino. So they are treating their trading as a business and not as gambling. So this is the mindset that separates those that are losing consistently from those that are winning consistently in trading. And remember, consistency does not mean you're making money daily. You could be making money not following your plan, and by the end of the day, you blow your account. But consistency comes with how consistent you apply your process, how you control what you can control, and you leave what you cannot control. So what you can control in trading is your mindset and your entry and all of those things, your risk management, your position sizing. But you can never control the outcome of any trade, and you can never control what the market is going to do. All right. So instead of treating trading as a casino, as a gambling, somewhere where you come and gamble your money, treat it as a business and it is going to pay you. All right. So this behavior, the behavior of the impulsive trader and the disciplined trader or the patient trader are two different behaviors. So their behavior is the behavior of a patient and a disciplined trader is one that waits for a proper confirmation, trades fewer but higher quality setups. All right. So you wait for price. If you have your trend line, if you have your fair value gap, and price has not yet traded into your fair value gap, then there is no trading opportunity for you. Even if you go online and you hear a lot of people saying, "Oh, I'm making a lot of money today," still be patient. Your ability to behave calmly and to wait for your setup instead of trying to chase setups because you feel like you're missing out on something, you wait for the market to give you a proper confirmation before you take a trade. So fewer trades in the market will lead to more profitability. When you trade less in the market, it means you concentrate on the high probability setups. All right. And high probability setups, they don't show up all the time in the market. That is why patience is an important aspect in every trader's journey. You must be able to wait for your setup to validate and for it to give you the proper confirmation before you trade. So setups in the market don't come up all the time, and so your ability to wait for the high probability setup is what is going to set you apart from those who struggle consistently in the market. So, money is made in trading not by being actively in the market all the time, but by being selective and trading with clarity. So, use stop losses consistently. Use stop losses. Your stop loss is your protection against you blowing your account. So always know the amount that you want to risk for a day, for a month, for a week before even placing a trade. Accept your losses in the market without emotional reactions, without judging your losses. So when you take a loss in the market, don't let those emotions take over, right? It is very easy for the emotions to take over, and if you haven't trained your mind and you haven't trained yourself enough to be able to catch these emotions when they start showing up, then anytime that you take a losing trade and you are unable to manage yourself, remember yourself is the most important asset in your trading. All right. So no matter what you do in life, you are the most important asset in whatever you do. All right. So when you take a loss in the market, the mind has its own way that it sees these losses. All right, it sees it as a risk, and the mind has developed to evade risks. Right, it tries to avoid risks, it tries to avoid losses. So when you take a loss, it is always going to pull up these tricks on you, trying to get you to revenge trade, trying to get you to get back the money that you just lost. So understanding our own selves and our emotional uh, shortcomings is what sets us apart from the rest of the traders that are losing consistently out there. So journal every trade. Your journal is just like a reflection. It's just like your mirror, mirroring back to you your strengths and your weaknesses, so that you're able to work on your weaknesses and to develop more on your strengths. All right. So always have a journal. Every profitable trader that I have seen out there has a journal, and a journal guides them in improving on their own self. So your ability to self coach yourself and to embrace continuous learning is tied to your journal. Okay, so always have a journal to journal your traits, journal your emotions before, during, and after your trade. Follow your strategy calmly and confidently. So, if you have done the work and you have a strategy, and you know that this strategy has been providing me with winning trades over this period of time, and this is the amount, this is the percentage of wins that I get from this strategy, this is the percentage of loss that I get from this strategy. So your strategy is a mathematical let's say a mathematical roadmap. All right, and it has to do with rules and principles. And so if you have a strategy that has proven to work over the past and still works in the market, then that confidence is going to be there, that calmness is going to be there. So if you have a good strategy, then the calmness and the confidence is going to be there. You just need to work on yourself and to be able to follow up on it calmly and confidently. So prioritize your capital over winning in the market. Your number one job as a trader is not necessarily for you to make money. Your number one job as a trader is to protect what you already have in your account. If you lose all your money, see, your money is like your workers, right? So you have employees in your daily business, you have your employees, they work with you. And how well your employees work will depend how much money you make at the end of the day. So your capital is your employees in trading. And if you send your employees into dangerous zones and you kill your employees, all right, or if you are fighting a battle and you send all your soldiers to die, it means that you're going to lose the war. So protect your capital, protect your soldiers, protect your employees so that they are able to go out there and they are able to work more money for you. So I usually look at my money as it being pregnant. So if I have $1, I would say this my $1 is pregnant and it could give birth, and it could give birth to more dollars. All right. So that is how I see my capital. I see my capital as being pregnant at each time, and every time that I'm putting it in, it could give birth to more dollars. And I'm not going to be putting it into work on any type of opportunity. I need to be putting into work on those opportunities that provide the best chances of me making profits out of it. All right. So that is it. So uh if you are a patient trader and a disciplined trader, then your results are going to speak for themselves. Your results are going to be fewer mistakes. Your results are going to be smaller drawdowns, better win rates, consistent growth, and strong psychological stability. And all of these is going to lead you to long term profitability. So, by embracing the mindset of a disciplined and a patient trader, your results are going to transform significantly. All right. So, this mindset is not a mindset that gets to be built in one day. I am not saying that by the end of this lecture, you're going to miraculously become a patient and a disciplined trader. That is what I'm not going to say. See, trading is a habit, and this is a habit, and a habit is something that we have done over and over and over in such a way that it becomes automatic. And so, uh, our indiscipline has become a habit in us. So we need to bring discipline and patience to become a habit. And so trading needs to become a habit. It needs to become something that is automatic. And we need to do it over and over and over and over. We need to train the mind. And thankfully, the brain is a neuroplastic mind. We have a neuroplastic brain, meaning that it has the ability to change. So we can turn one thing good, fear to courage, impatience to patience. So we can transform our impatience to patience. All right. So discipline creates the compounding effect. Small good decisions repeated over time builds the habit, and this small repetition is going to create a positive reinforcement, and this positive reinforcement creates a new habit, and this is the mindset shift that brings us big trading success. So success in trading is a habit that will have to be cultivated day in, day out. So trading is more of a lifestyle than just you getting into the market and trading and going out. So trading needs to become more of a habit than a profession for you. Now, this mindset is what drives you to consistent profitability. This mindset is what you need. This mindset is our road to consistent profits in trading. All right. So the impulsive trader, on the other hand, is the one that is struggling consistently. And unfortunately for us, this is where most traders out there they fall. And it is not actually because trading is difficult, but it is because we have not just trained ourselves and we don't even want to. So most traders out there they don't want to do this work, this inner work, because the inner work is difficult. All right. It is difficult to discipline yourself, but it is easy for you to try to discipline other people. All right. So The impulsive trader is just like a ticking time bomb. And at each point, when they take a loss, when the market goes against them, when they come across fear, risks, uncertainty, it is all disaster. The bomb just goes off. So, how do they think? The impulsive trader will think in this way: I must enter this trade before the market leaves me. So they feel as if opportunities are always running away from them and opportunities are limited in trading. So they fear missing out. They fear missing out on any trade. So whenever the market comes into their point of interest without even giving a confirmation, they start feeling like, oh, I might miss this opportunity, and the next thing is they find themselves in a trade without having a confirmation. Let me revenge this my loss after taking a loss. Now your mind begins to tell you that, oh, this loss that you have taken is a risk to your existence as a human being. So remember, this is how the mind is seeing that loss. It is not just seeing it as you losing a small portion of your capital, it is seeing it as a risk to your entire existence. So what happens is that it starts telling you, get back inside, get back that money that you just lost. And the next thing is that you revenge trade. And it is only after you have done that damage that you begin to that realize yourself. All right. So maybe this one will work. All right. You start guessing instead of following your plan and following structure. You start guessing. Eh? Will maybe this trade will be a winning trade? I should just take this trade. Or somebody sends a signal, you say maybe I should just try out the signal, and by the end of the day you lose on that trade. I cannot miss this move. You have that urge to trade all the time. So day trading does not actually mean everyday trading. It means that you being able to trade on the days that opportunity presents itself, and opportunities, they don't present themselves every day. So that is what we mean by day trading. Trading on the days that opportunities present itself. This impulsive mindset is driven by fear, by greed, and by impatience. This is the mindset, this is the mind that we naturally bring into trading. See, the mind that we bring into trading has not just been naturally adapted to trading. That is why we face a lot of difficulty in trading. So the mind that we bring into trading is a mind that is rooted in fear, in greed, in impatience, indiscipline, and all of these things. Except that you won the genetic lottery and you came with all of these attributes. Every human being has these emotions embedded in them. And this does not help us in trading in no way. So we need to train the mind, because the mind that trading requires is completely the opposite of this. It is a mind that is rooted in courage, and it is a mind that is rooted in gratitude. It is a mind that is rooted in patience. All right. So the behavior of an impatient trader is very, very common, and we see it every time in ourselves and in different traders. Enters trades without any plan. All right. So somebody just say buy go now and you enter without a plan. You were not planning to trade, but you traded. Looks at the market and trades without the market confirming their plan. Chases every candle. A buy candle comes up, they buy. A sell candle comes out, they sell. Overtrades during emotional periods. Right. So when you take a loss in the market and your emotions start running wild, you find yourself doing exactly the opposite of what you said you were not going to do. Doubt their strategy, is always looking for strategies, running from one mentor to the next, from one YouTube video to the next, from one book to the next. When price is approaching their stop loss, they remove their stop loss, all right, and they shift it a little bit again downwards. When price is when price leaves their entry immediately, they want to block their entry, and price comes back, hits your stop loss, and continues in your direction. Closes trades too early or too late. All right. So when you get into that trade and your emotions start telling you, you're going to these profits that you have made like this, you lost on the previous trade. Just take away this $10. It is better for you to take this $10. After all, half bread is better than none. And you close the trade. And the end of the day, the trade begins to go in your favor again, and you jump into the trade. And when you jump into the trade, it begins to reverse against you. That is a typical mind of an impulsive trader. Get frustrated every time the market gives them a losing trade, or when they make a mistake and they start revenge trading. That is a typical mind for an impulsive trader. Fails to journal and to reflect on their trade. Fails to come back and to look at their trade. I took this trade today. What worked out? What did not work? All of these things, they depend, or they influence the type of trader that you are going to become. So these are traders, two traders trading the same market, experiencing the same feelings and emotions in the market, but reacting or responding to them differently. All right. And the way that you react or you respond to the market is what sets you apart from the traders that we have out there. Are you reacting to the market, or you are responding to the market? If you are reacting to the market, it means that you are impulsive. If you are responding to the market, it means that you are a calm and a disciplined trader. All right. So that is the typical behavior of an impulsive trader. And the result of this is usually very, very common, and it speaks for itself. Inconsistent profits, because you don't have a good process, or maybe you have a good plan but you cannot follow that plan and the process to fruition. Then your profits become inconsistent. So your trading your success in trading is not dependent on the knowledge, or on how on the indicators that you know, or on the people that you know. It is dependent on how well you can follow your process diligently. So big losses that wipe out your gains. All right. So if you're that type of trader that you win throughout the week, and by the end of the week you take one trade and you lose everything, then that is a mind of an impulsive trader, and that is the result that an impulsive trader gets. Emotional breakdowns. You feel so frustrated after you have lost a trade, or after you have blown your account. That is the mind of an impulsive trader. That is what you get for being an emotional trader. You are happy in the morning, sad in the afternoon, sad again in the evening, happy and sad. So your emotional buttons are being pressed by the market, on and off, on and off. So the market is playing ping pong with your emotions, and that is not good for you, the trader. And also fears losing and fears missing out on trade. Missing out on a trade or losing does not mean that you are a bad trader. That is a natural process. That is something that is natural in trading. If you lost a trade but you followed your plan, you were patient, you were consistent, but the market just decided not to give you a winning trade, then you are a great trader. If you missed out on a trade, it is good and fine. Other opportunities are still going to come along. Loss of confidence after you have lost, or maybe after a losing streak, your confidence is gone. That is the result of you being impulsive in trading. Account blowout. That is the most big result of all impulsiveness that we find in trading. Impulsive traders will guarantee you chaos in trading and not growth. So now you should know which of these mindsets you should find yourself in. Where should you find yourself in? Should you be among the patient and the disciplined trader, or you should be among the impulsive trader? So the patient trader and the impulsive trader. The patient trader bases their trades on logic, while the impulsive trader base their trade on emotion. The patient trader will accept waiting as part of success, while the impatient trader feels like waiting is losing, waiting is missing out on opportunities. That is how an impatient trader will feel. That is what an impulsive trader will feel. A patient trader is going to trust their plan, while the impatient trader abandons their plan immediately they lose a trade or when they encounter a losing streak. So, a disciplined trader is going to follow risks. Their risk is control, while an impulsive trader has random risks. A disciplined and a patient trader thinks long term, while an impulsive trader thinks on moment to moment or short term gains, short term wins, the profits that they can make right now. A patient and a disciplined trader will function calmly under pressure, while an impulsive trader will panic and let all hell break loose under pressure. So these are the key differences between the impulsive trader and the disciplined trader. So by now you should know where you should find yourself, where you should be, where you should be positioning yourself. When you study the successful and the non-successful or the unsuccessful traders, then you are going to definitely know where you should find yourself. So this difference is not a skill, but it is emotional control. The highest thing that we have to do as traders is our ability to control our own self, to control our own emotions. That is the most difficult part in trading. Okay, that is the most difficult part in trading. So why is patience the real edge in trading? In trading, the real skill is not really about predicting candlesticks, telling when a candle is going to close, where it is going to close, how it is going to close. All right. It is in mastering these psychological truths. One, the market moves in cycle. If you miss today's move, another move will come up. Understand this. Opportunities in the market will always show up. Secondly, high quality setups are rare, and a trader that wins often is a trader that has the ability to wait for these rare opportunity. So the trader who waits for the high quality setups are those that win in trading, while those who are impulsive, reacting to every opportunity that the market provides, are those that lose consistently in trading. Discipline is what protects your capital. Without capital, your trading strategy, be it the best trading strategy that you have out there, it becomes useless. If you have a car but you don't have fuel to put in that car, to drive that car is useless. Okay, so if you have a good strategy and you don't have the capital to execute that strategy is very, very useless. Patience eliminates emotional traits. Emotions are the enemies to consistency in trading. Mind you, emotions are good, but when we bring them into trading, that is where we have a problem. So, patience in trading eliminates emotional traits and it drives consistency in trading. So, our emotions are our natural enemy to our consistency in trading. Understanding our emotions and knowing how to work with them, because we can never wipe out our emotions, is the only way forward. All right. Now, impulsive traders donate their money to the disciplined and the patient traders. So the market just does one thing. It transfers money from the patient and the disciplined traders to the impatient and the indisciplined traders. That is what the market simply does. So you need to decide where you want to be. You need to decide where you want to fall. Do you want to fall among the patient traders, or you want to fall among the impulsive trader? The patient trader literally profits from the mistakes of the impulsive traders. So if I am winning in trading, it means that there is somebody out there who is losing. And if I am losing, it means that there is somebody out there who is definitely taking my money. So if I am impulsive, somebody is going to take my money. But if I am calm and I am controlled, I am definitely going to take the money away from someone who has refused to be disciplined and to apply the knowledge and to accept that they themselves are the biggest problem in their trading strategy. Now, how do we become a patient and a disciplined trader? So, we cannot talk about all of this without talking about the ways in which we can develop this attribute of patience and discipline in ourselves. So, this is something that we develop over time. It is not something that we do just in one go, all right? It is a habit, and I mention that a habit is something that takes time. A habit formation takes a period of time, and so you need to do this consistently for a period of time for it to become a habit. All right. So you must have a clear trading plan. Okay. Becoming a consistently profitable trader does not happen in a single day. It takes time. So you must have a clear and a defined trading plan where you have clear entries, stop loss, take profit, and exit rules. If you have a good plan for entry, but you don't have a good plan for exit, then there is a big problem. All right. So you could find yourself with very good strategy, good entries, but bad exits. And it is either you're going to be making less than what you were supposed to be making or completely losing. So have a plan for your entries, your stop loss, your take profits, and your exit. What do I need to see to confirm that I need to get out of this trade? In a buy position on gold, and gold is trading in an uptrend. It approaches a resistance level, and on that resistance level I begin to spot reversal patterns on it. Do I keep on holding on to my trade? No, I get out of my trade. Right. That is how you set exit rules for yourself. You have a plan for your trade. You plan for your trades before, during, and after your trading. A lot of people, they just get up in the morning and you take your phone, your MT5 account, you open, because we have access to internet connection and to trading. You just open and you start placing trades without any plan. That is when you start losing money in trading. So trade fewer setups. That is the second thing that we do to become a consistent a profitable trader, or to be a patient and a disciplined trader. Trade fewer setup. Pick only A plus setups and ignore everything else. Have one instrument, have a few instruments, one or two instruments. Example for me, I trade gold and I trade BTC, right? Those are my instruments that I trade, and it makes the process simple for me, and it makes trading more patient and a more disciplined process for me. So trade fewer instruments and trade fewer setups. Use time frames to calm your mind. The higher time frame remove emotional noise. So when you place a trade, instead of going to the lower time frames and watching every tick, go to the higher time frame. They are going to remove the noise. So place your trades on the lower time frames, but observe it on the higher time frame. So when I place my trade on the 15-minute time frame, I am doing my observations from the 1 hour, the 4 hour time frame, and not even the 5 minute or the 15-minute time frame. It takes away all the noise and the emotional roller coaster that we face as traders. Limit your daily exposure. The more you expose yourself to market, the more you get into the trade, the more you look at your chart, the more you expose yourself to risks. Every trade that you take out there has the possibility of being a losing trade. So when you expose yourself to risks over and over and over and over, what are you doing? It means that you are going to be losing, or you're going to be finding yourself in unnecessary risks than what you should be bearing. 1 to 2 trades per session or per day is good enough. All right. So use the 10-second rule. Before entering a trade, stop and ask yourself, is this a plan-based trade or an emotional trade? This is what is going to help you to avoid taking emotional or impulsive decisions in trading. All right. So discipline over desire. The market rewards one type of trader: the trader who can wait, the trader who is patient. The patient trader is not passive. The patient trader is a strategic trader. So patience is not passive in trading, but it is a strategic tool that we can use in our trading strategy. All right. So impulsive trading feels exciting in the moment, but disciplined trading feels rewarding in a lifetime. And if you want to become a lifetime trader, then you should be building your discipline over desires. Your mind is the strategy, your discipline is your edge in trading. So, my friends, if you have enjoyed this up to the end, and if you have watched up to the end, it means that you have gained a lot of value from this. And the best thing that you could do for the channel and for other traders out there is to give a like and to share to your friends and let them learn as well. So giving a like is like giving YouTube the go ahead to recommend this video to more traders out there so that they can benefit from this. So when you like, you're telling YouTube algorithm that, oh, this is good stuff, recommend this to other traders. Right. So if you have watched to the end and you have really enjoyed what you have heard, please don't only enjoy it, put it into practice consistently. Do it over and over again, and you are going to see significant changes in your trading. And if you are not a member of our Telegram community, the link is in the description. The link is also in on our screen right now. You can just click on the link on the description to join our Telegram channel, where we give market updates on technical analysis, mindset, emotional regulation, and a lot on trading. So we have other trading opportunities that we also present in the channel as well. So if you want to contact us, if you have a question, if you want to contact us for inquiries, for bookings, and for mentorship, here is our number. The number is also in the description. You can reach out to us anytime and we'll be glad to respond to you. And if you are new to trading, your trading is going to be built on three foundations: your mindset, your psychology, your emotional regulation. It is going to be built also on your methodology. And thirdly, it is going to be built on the broker that you use. And so, my friends, we are introducing to you Xness as or recommending to you Xness as our choice broker, and you can create your 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 account free of charge. And if you are from Cameroon, you can reach out to us for verification. The number is there. Get to us. The link is in the description. And also, if you have any problems creating your Xness account, you can always reach out to us as well. And also, there are videos that are going to explain to you how to create your account and everything that pertains to Xness. And there are also a lot of videos that you can make use of in the channel. So go check out the channel and use the time to learn. Your success in trading is going to be dependent on your knowledge, on your experience, and on the skill that you build. So trading, my friend, rewards patience. Discipline is your edge, and emotions will destroy your consistency. So, God bless you all. May the universe continue to guide, protect, and provide for you each and every step of the way. God bless you all and have a great rest of your time. Bye bye.